Good morning, Andrew. Ed, thank you very much for joining us today ahead of the presentation that you'll make in a few minutes at the J.P. Morgan Industrials Conference. Let's talk about your guidance for Q1.
Yep.
Given jet fuel prices, everybody has been assuming that all the airlines will cut their guidance, but you're not cutting your guidance. What are you seeing for Q1?
Well, it's been an interesting quarter. First of all, jet fuel prices have almost doubled just since the start of the quarter, and that's a fairly significant hit for us, about $400 million in the quarter. That said, the demand strength has been really, really great. We're looking at somewhere around 3 points of higher revenue growth above what we guided for originally in the quarter. So the higher revenue is offsetting the cost of not just the fuel, but we've also had a pretty tough winter season in terms of storms. And we lost about 2 points of capacity there as well. So you put that all together, we're expecting to come in within the original guidance of 50 to 90 cents EPS, which is still healthy growth on top of that over the prior year.
Let's talk about that demand, because I think some people are listening and they're saying, wait a second, given all the uncertainties about the economy, the stock market, what's going to be happening over the next 6 months, given all that uncertainty, why are you still seeing this strong demand right now, and where is that demand coming from?
Well, our consumer is really healthy. We live at the top end of that K that people talk about, the premium end of the K, and that's where over 90% of our revenue is sourced from. That group of folks want to travel. They're investing in themselves. They're investing in the experience economy. We've seen 8 of the top 10 sales days in our history this quarter, and 5 of those just within the last 2 weeks. Within just the last week of this past week of March, even with fuel prices, even with the war going on, our revenues, our bookings are up 25% year over year. Now, part of that also we're lapping first quarter a year ago, which was soft because of the tariff noise and the issues and the uncertainties around that. But we've more than overcome that and made a significant step forward as well.
Any difference between corporate and leisure demand?
They're all going high. Corporate is up double digits, almost every sector that we cover. And leisure demand, particularly in the premium cabins, are doing well. Domestic's doing well. Main cabin, which has been a source of consternation. We're looking at our unit revenues being up somewhere kind of in the mid-single digit range year over year. So the revenue side is really strong. And the cost side, though, we're going to have to cover it.
On the revenue side, you're raising fares. All airlines are raising fares. You have to offset what's happening with jet fuel. When do you start to see that resistance? I know you can't predict exactly, but are you getting close to that point yet?
I don't think so. There's been a number of fare increases just in the last 2 weeks. The industry, Delta's brand is really strong. And so when you have that level of resilience, you have that strength of pull for demand, customers understand if fuel prices are up, it's cost doing business. It's incumbent upon us to figure out ways to recover that. As you go down the food chain in the airline industry, you've got a number of weaker carriers that still haven't returned their cost of capital, still losing money, even since COVID. They have no choice but to find ways to cover that fuel quickly.
The Energy Secretary just a couple of days ago said, look, we may be in for a couple of weeks of higher gas prices, and we're not sure when we might see fuel, or let's say oil, drop down and ultimately jet fuel prices drop down. What happens to the airline industry and to demand if we see oil prices at this level, let's say 2 months from now?
2 months is still a relatively short time. But if we find a new level higher for a period of months, then I think you'll see business plans starting to be significantly altered on the lower end of the spectrum. The guys that are doing well, such as Delta, the strong get stronger.
And you think corporate travel hangs in even if we do have extended high fares and high prices for jet fuel, causing those fares to go up? You think corporate demand stays strong? I
think it'll stay strong. It's hard to speculate based on what the impact the economy is going to have relative to fuel in general. But when the world has changed, corporates can't sit back and start to cut when you have so many things moving around with technology, with geopolitical tensions, with consumers, kind of trying to understand where they are. That's where we've seen across the board. People need to be out with their customers. They need to be out in their markets. And I don't see that changing.
DHS funding. We've talked about this before. You and all the other CEOs wrote a letter to the Washington Post yesterday, a public letter saying, pay these people. Are you starting to notice an impact on operations in terms of hotspots that flare up around the country, causing people to be delayed and miss their flights?
We certainly are. It tends to be more on the weekends. Has tended to be more in the South this weekend. We saw it in Atlanta for the first time in kind of extended lines. We also had winter weather come through Atlanta, which also accelerated and exacerbated that situation. It's inexcusable that our security agents, our frontline agents that are essential to what we do, are not being paid. And it's ridiculous to see them being used as political chips. So, we're outraged. And if there's a call to action here, and I think over 90% of the American public support those people getting paid, ask our folks right here in Washington to do their job, get our people paid. They can do it.
What percentage of your customers, would you say, have missed flights because of the problems with TSA staffing?
There's been some. We do our best to hold flights where we can. It's not a massive issue. I'm not worried about it from a line perspective. We'll figure that out. It's fairness. These people missed paychecks just a few months ago. They're missing paychecks again. It's outrageous. Let's get our security agents. We got a war going on. Let's get our people that are essential to our security paid.
Quickly, I want to ask you about the Wall Street Journal report that the SEC is preparing to move forward with a proposal to drop the requirement of quarterly financial results being reported on a quarterly basis. Moving to, hey, you want to do it every 6 months? If you're a company, you can do it every 6 months. Would you prefer to be every 6 months?
We'll evaluate it. I don't know. We'll need to talk to our investors and get a sense. I think our investors that are long-minded for the long term probably would prefer that. Those that are more short-term oriented may not be. So we'll get a sense and a pulse of our investor community, and we'll talk to our board. And I hope we get an opportunity to make a decision on that.
Ed Bastian, CEO of Delta. Good to be with you here in D.C. Guys, we'll send it back to you.